Godwin Emefiele did not rise through politics. He rose through institutions. For years, he was a quiet figure in Nigeria's financial system, trained, credentialed, trusted. When he was appointed governor of the Central Bank of Nigeria in 2014, he inherited one of the most powerful non-elected positions in the country. The CBN governor does not pass laws. He does not command armies, but he controls money. And in Nigeria, money is power. Emefiele's early years were steady. He spoke the language of stability, inflation control, and development finance. Under him, the central bank expanded far beyond its traditional role. It stopped being just a regulator. It became an actor. The CBN began funding agriculture directly, manufacturing, power, aviation. Intervention funds multiplied. Trillions of naira were injected into the economy through special programs, loans, and development initiatives. Supporters called it bold. Critics called it reckless. What everyone agreed on was this: the central bank was no longer neutral. Under Emefiele, the CBN blurred lines that had once been clear. It regulated banks, financed businesses, enforced currency policy, and increasingly made political decisions. Then came the currency controls. Foreign exchange became scarce. Access to dollars tightened. Businesses struggled. A black market thrived. The gap between official and street exchange rates widened dramatically. Nigeria's economy strained under inflation, unemployment, and currency pressure. And then came the policy that changed everything. In late 2022, the central bank announced a currency redesign. Old naira notes would be withdrawn. New notes introduced. Nigerians were given weeks to deposit old cash before it became invalid. The stated goal was to fight inflation, reduce cash hoarding, and curb vote buying ahead of elections. The reality was chaos. Banks ran out of cash. ATMs went dry. Long queues formed across the country. Businesses shut down. People slept outside banks. Hospitals, transport systems, and markets were disrupted. For weeks, Nigeria functioned on scarcity. The Supreme Court intervened. The presidency distanced itself. Public anger grew. And at the center of it all was Godwin Emefiele. For the first time, his position looked fragile. Then came the rumors that he had grown too powerful, that he was financing the government directly, that he was running the central bank like a parallel treasury. In 2023, Nigeria changed presidents. And within weeks of the transition, the story turned. Godwin Emefiele was suspended from office. Then he was arrested. The arrest was not subtle. He was detained by Nigeria's Department of State Services. Allegations followed quickly: abuse of office, corruption, manipulation of policy, illegal financial practices. The man who once controlled the naira now had no control over his own movement. As investigations unfolded, more details emerged. Authorities accused Emefiele of using his position to influence contracts, approve questionable financial arrangements, and operate outside the legal boundaries of the Central Bank Act. There were allegations of forex manipulation, illegal loans, and conflicts of interest. Properties were searched, assets scrutinized, charges were filed, withdrawn, refiled. The legal process was messy. Courts issued orders. Agencies ignored some, enforced others. Bail was granted, then delayed. Detentions were extended. Jurisdictional battles played out in public. What became clear was this: Emefiele had fallen out of protection. Supporters argued he was being scapegoated, that he carried out government policies and was now paying the price for political decisions, that many of the actions under investigation were approved at the highest levels. Critics argued the opposite, that the central bank under Emefiele had become unaccountable, that trillions were spent with little transparency, that the institution lost its independence, and with it, public trust. One issue stood above all others: the Ways and Means facility. The central bank had lent massive sums directly to the federal government, far exceeding legal limits. What was supposed to be temporary financing became a permanent pipeline. By some estimates, the loans ran into tens of trillions of naira. Economists warned that this fueled inflation and weakened the currency. Investigators asked a simple question: who authorized it? And was it legal? Emefiele said he acted in the national interest, that extraordinary times required extraordinary measures, that the government needed support. The state said procedures were violated. Between those positions sits Nigeria's economy, still struggling with inflation, currency instability, and public distrust. Today, Emefiele's case remains unresolved. He is no longer central bank governor. His reputation is fractured, his legacy contested. To some, he is a technocrat who overreached. To others, a convenient fall guy. To critics, a symbol of institutional collapse. What is not disputed is this: under his watch, the central bank crossed lines it may never fully recover from. Independence was compromised, policy became personal, and the consequences landed on ordinary Nigerians. Queues, inflation, currency collapse. This story is not about one man alone. It is about what happens when institutions lose restraint, when power concentrates without oversight, and when the line between economic management and political survival disappears. Godwin Emefiele once held Nigeria's financial system in his hands. Now his fate lies with courts, prosecutors, and history. And history, unlike currency, cannot be redesigned.